JJ the CPA here. Let's talk about financial statements and an overview of that on why you really would want to pay attention to the financial statements of something you're investing in, but more importantly, the financial statements of your own business. So first of all, you have two basic financial statements to be looking at, sometimes three. What is it? A balance sheet. What is this? It's the assets that are in the business, the liabilities are in the business, and then the difference is, in essence, your book equity that then balances out. So you take your total assets, you take your total liabilities with the additional or the difference between your liabilities and your assets, and you put those together and they balance. That's why it's called a balance sheet, so that these two things balance out. And here's how I look at it. If your assets are on there correctly and your liabilities are on there correctly, then you should feel very confident that the next financial statement is correct, which is your profit and loss statement, your P&L. P&L is your income and your expenses. But more than that, you have your income, and then you have cost of goods sold, then your overhead expenses, and then for out of the ordinary income, down at the bottom you can have an other income, and then for out of the ordinary expenses, you can have expenses down below to then arrive at net income of your business. And so QuickBooks is I'm a big fan of QuickBooks, but the way I design the financial statements, the P&L for my clients, as well as my own practice, is I've got my regular recurring income at the top. The cost of goods sold, it's not necessarily the buying and selling of a widget that would go in your cost of goods sold. It would be your direct costs on whatever it is that drives that top line, your gross income. So for me, it would be labor. And then the expenses is your overhead. You're going to have these expenses whether you open the doors or not. And then down below, the reason to have other income and other expenses broken out as extraordinary is that it won't then cloud how your business is doing if you have an extraordinary sale, let's say, on an asset. It won't cloud what your expenses are if you had a huge purchase of some equipment one year. And then the third one that you don't see all the time, but is definitely beneficial, is a statement of cash flows. And what is the purpose of that? It basically says, here was your beginning cash amount, so the amount in the bank, and here's your ending cash amount. And then what happened to arrive at that? Because this is what you should know. Income does come in, it goes on your P&L. Money goes out, right? Those are your expenses. But then what other things take up your cash? Paying off debt, or paying out distributions or dividends. Those are things that don't show up on your P&L, but it is cash out the door. So the cash flow statement basically shows you the relationship between your P&L and then the changes to your balance sheet to arrive at the most important part of your financial statements, but is what your cash balance is. So that's a quick overview. And here's the bottom line. You want to know what your financial statements are, because that will help you make better decisions. Look at it from a black and white standpoint. All right, hey, I'd love it if you would subscribe. Here's the deal. I'm on every social medium, just hashtag JJ the CPA. And then if you would click subscribe, I so appreciate it. We have a video coming out every single day. And then don't you ever forget, you've never met a CPA quite like me. Here's the bottom line. You need to subscribe to my videos, right? I've given you valuable information here. I appreciate you tuning in, but here's what I need you to do. A favor, click subscribe, check out my other videos, and then don't you ever forget, you've never met a CPA quite like me.